Auditing and Assurance Standard Board of Institute of Chartered Accountants of India. I welcome you all in today's webinar on communicating key audit matter, emphasis of matter, and other matter in the Independent Auditors Report. As we all are aware that 700 series of these auditing standards are all the standards included in 700 series are very important, and this is the very important time to communicate with the all the members regarding this 701 and 706 standard relating to the CAM as well as the emphasis of matter and other matter in the Independent Auditors Report. In order to tackle these two standards, 701 and 706, we are having with us a very important, very learned speaker, Sri Aleem Lilani ji. So on behalf of WSP of ICI, I extend my warm welcome to Aleem ji. Aleem ji, welcome. Namaste.
Thank you.
I also welcome all the participants of today's webinar. And before we formally start, it is my proud privilege to share with all of you the brief profile of today's learned speaker, Aleem Lilani ji. Aleem Lilani ji is a chartered accountant as well as he has qualified his master.
I'm not sure if you're audible.
Audit and assurance. Am I audible?
Now you're back.
Am I audible, sir?
Yes, now.
Yes. Aleem ji has over 16 years of varied experience in providing audit and assurance services to clients and handling quality assurance and risk management for auditing and assurance practice. His expertise and experiences include audit and assurance services to the manufacturing sector, service sector, oil and gas sector, financial sector. Also included quality assurance in audit and assurance practice through advertising, on qualification in audit reports, certificates, financial statement reviews, conducting code reviews, drafting engagement terms, etc., as well as guiding the term audit teams on implementation and interpretation of Indian GAAP, Ind AS, IFRS, Companies Act 2013, SEBI regulations, etc. He has also expertise in standardization and circulation of audit, review, certification work, paper formats, checklist, audit manual, policies, procedures. He has imparted various trainings to the various platforms at the WIRC as well as the Auditing and Assurance Standard Board and various platforms of various institute platforms in the form of physical seminars as well as the webinars as well as virtual CP meetings. He has also imparted various training pan-India on implementation on audit tools, auditing standards, IGAP, Ind AS, Companies Act, SEBI regulations, as well as in the GMCS course also. He is also providing expert opinion to the clients, assurance service to the capital market transactions, IPO, QIP, etc., and regular speaker at various forums, as I have already apprised you at the various platforms of the Institute of Chartered Accountants of India, as well as ACCA, etc. So the list is still long, so without wasting much more time, I request today's learned speaker, Aleem ji, to please enlighten all of us on various aspects of both the standards 701 and 706. Over to you, Aleem ji, please.
Thank you very much, Anil ji, for a very elaborate describing my profile. But I would like to be humble, say that we are still learning, and it's a continuous process. It's just that this profession has given us an opportunity to look at so many angles of business, so many angles of accounting, that it just collates over time. And it is my honor today to sit, before you and speak of my experience. And it is a privilege that the experience that we have can be shared, it can be multiplied, duplicated, and a lot of people can benefit from it. We are in a profession where we are not concise to areas of specific areas, subjects. Our subject is so vast that we can explore it, extract it, expand it, and later and the final, in the end, we can concise it back and explain to the world and simplify to the world what the complex businesses are, the complex transactions are, and we bring them all down to one page in the audit report and give comfort to everyone. So that is something that is a very good part of our profession, and it is my privilege to be a chartered accountant and to, of course, be here and share my knowledge with all of you. Of course, this day and this time is not possible without the great guidance by our respected seniors who have always mentored us, and the Institute of Chartered Accountants of India that have kept such an exhaustive syllabus, and our respected chairman and presidents and all the members of the council at the central and the western level who continue to keep pushing education, CP training, seminars to everyone in the profession, no matter where we are. And this online platform is another great achievement that we can spread our knowledge no matter where we are. So my humble gratitude and thanks to all of you, all the people that are sitting back at the institute who have arranged this kind of a session for everyone's knowledge in the peak season that is going on. So that's amazing, and I want to thank you all very, very much for that first. So let's get into our topic and let's start talking about audit, and let's start talking about auditing standards. Now I'll just share my screen. If everyone can just confirm, if it's visible. Yes, I believe the screen is visible now.
Yes, sir. Yes, sir.
Great. So today's communicating topic is key audit matters, emphasis of matter, and other matter para in the independent audit report. I have chosen this topic especially because it is one of the most important ways an auditor can demonstrate and educate the reader of the financial statements. Forget qualifications. Qualification is something going really wrong, and we telling them that something is wrong. And telling them that the financial statements don't give a true and fair view. But when we are in between that path where financials give a true and fair view, but there were so many factors that went into the audit, you want to communicate to the stakeholder. You feel it is important for that stakeholder to understand a little bit about how I did my audit, little bit about what's there in the financial statement that he should focus on. It may be important for his understanding. And other matters where we want to say about our responsibility. We want to talk about us. That how did we, go about undertaking the entire audit, and anything we want to communicate that should be to their knowledge. That is what is the communication gap that is bridged by these very standards. So today the auditing standards that I'm covering is communicating key audit matters. That is SA 701. Emphasis of matter and other matter. These are paras covered by SA 706. These are two very specific standards that are there in the auditing standards lot, which comes towards the end when we have finished our audit, when we have finished our work, we have done the materiality, the sampling, the audit checking, the documentation, everything is done. And we come to the last moment where we have to decide.
Apologies. Sir, sorry to interrupt you. There is some disturbance in the some speaker is noising or something is noising from your side.
My side?
Yes, sir. IT technical team, can you help?
Okay. I just
because your voice is not clear. Something is disturbing in the voice.
It should be better now. Is it better now? Hello? It is better now, right? I just disconnected the other screen. Okay. I hope it's clear and I can continue.
Yes, sir. Please.
Okay. So as I was saying, towards the end of the audit, when we come and we have to decide now what we want to communicate with the outside world, is where we come into emphasis of matters and other matter paragraphs. So very important standard. Often we forget the focus is only on qualify, not qualify, disclaim, not disclaim, but we forget that there is much more we can communicate with the stakeholders. And today's stakeholder is waiting to listen from the auditor, what he has to say about the financial statement, what he has to say about how he did the audit, what he has to say about the very critical areas. And that that, my friends, is communicating with the stakeholder through these three paras, which is very, very important in today's world, because everyone's eyes are on the auditor. Everyone wants to hear from the auditor. The gone are the days where they only saw qualified, unqualified report and closed it. They want to hear more from the auditor, and this is the only place where we can communicate with the outside world, the reader of the financial statements. There is no other platform, and that's why we must give this a lot of importance. So today's session, we will go into understanding how do we write the key audit matters, what is an emphasis of matter, what is an other matter. I will share some examples. So we will have an understanding of, you will see that you can use it. It's not that no one has stopped us. It's just that sometimes it's been some time since we have studied, and sometimes we may just slip because these matters are not considered so important, but it's a great way to communicate with people, with stakeholders. So let's take a look at what we will be covering. We will start with 701 key audit matters. We'll start with the definition of key audit matter. We'll start with the judgment framework that is required to determine what is a key audit matter. We'll deal with some FAQs and what other considerations. And we'll also talk about the interplay between an emphasis of matter paragraph and a CAM paragraph, because many people have difficulty understanding the difference or drawing a line between the two. Okay. So the definition of a CAM, which came into practice in 2018, the standard was released in that year. We have completed almost 5 years today. Key audit matters are those matters that, in auditor's professional judgment, were of most significance in the audit of the financial statements of the current period. And the second part it says is that the key audit matter is selected from matters communicated with those charged with governance. Two important factors come out from the definition, as it is mentioned, that first, they have to be matters of significance. We cannot take immaterial matters and put them in the CAM. They have to be very, very important matters that you want to communicate. Second is that they must originate from the list or the matters that you did already communicate with those charged with governance. Now, this brings into a focus another standard, SA 260, which is communicating with those charged with governance, and we'll look at that also further. But this is where we go step by step how an auditor is supposed to proceed in his function here. So what is the requirement and the purpose for communicating a CAM? So as I already explained, what do we want to do here? We want to focus on how it affected how was the audit approach effective? What kept the auditor awake at night? I love that line that exactly says what I want to tell the world. Why was I awake at night working on a particular topic or subject? And that matters what I want to tell the world. It's not that that is something wrong there. No, it is that I had a difficulty. I had to work very hard to understand that area. It was maybe complex, the significant judgment. I have spent enough time, me and my team, doing that work. And that is the reason I want to tell the world that there is an area which is complex in the financial statements. Please understand that we had a difficult time doing this audit. The CAM became the only place where an auditor could tell his pain to the world. This, from my view, this is the para where we bring out our pain, because we all understand that businesses are getting very, very complex, and every businessman assumes that it is the job of the auditor and he should be able to do it very easily. But that's not the fact. The complications go up at every stage of the audit, and we also need a voice to, we also need a platform to tell the world that this is something that is difficult for us also. They can appreciate only if we can say it on some platform, and 701 became that platform. So I would like everyone to take care that you do communicate your complex matters, your difficult matters in a CAM area. You must consider to communicate them. It provides increased focus by the management and the TCWG on their understanding of the entity and the disclosures and the significant judgment involved. So very simple, if I'm going for a CAM and I want to tell the world something, the management will also wake up and say, oh, okay, I'm also going to be with you, and I will also make put more focus on that area, because ultimately something integral to the company is going to be stated outside. So the management also becomes awake that, okay, I have to focus on this area. It is a difficult area for the auditor. I must work with him. It should not become that the area gets unaudited or becomes a qualification tomorrow because of the limitation of scope or the management not sharing enough information. So management also gets alert and gets deep focus on these areas that, okay, I have to work with the auditor and help him to clear these matters. It encourages greater engagement between the user of the finance statements, the management, and the TCWG. Of course, if an auditor says he's going to consider this matter as a CAM, if the management gets involved, the TCWG gets involved, well, that's going in the report. That is how they come into the picture, which earlier was not the case. The board was not aware of how the difficulties the auditor was facing. So the first time it became necessary for the management to go to the board and say, auditors are having this problem. They are planning to put a CAM in the report, and that's how they all get involved and they support us. Okay. How do we communicate the CAM? So the wording that has come in the standard is very beautifully put. The CAM are those matters in the auditor's professional judgment which are most significant in the auditor finance statement. So the definition of the CAM is coming in the first introduction of the report in that part. So that covers the definition. And we also say that those matters were addressed in the context of the audit of the finance statement as a whole. This is very, very important that we are talking as a whole. We are not drawing up opinion on a specific matter. I'll take a step back here and explain. An audit is an audit of the entire balance sheet. We have never ever communicated in an audit report assurance on any of the factors or any of the financial statement line items. And that is a sacrosanct, and that has to be maintained at all times. So 701 is saying the same thing. Do not consider this to be an opinion on the revenue, or let's say the purchase or the inventory or the intangible assessment. No, we are not giving an opinion. We are not certifying a particular area. This is the very, very important thing that needs to be understood and appreciated. And I will later share with you how this has to be taken care of when you draft a CAM. So before we write the CAM itself, we do mention these matters were addressed in the context of the audit of the financial statement as a whole. And in forming the auditor's opinion thereon, the auditor does not provide a separate opinion on these matters. It's clearly mentioned in the audit report and has to be understood in that context by everybody who reads it. Okay. Now, what are the contents of the CAM? Okay. So how do you decide? So the description of the CAM that you put, it should include a reference to the related disclosure in the financial statement and should address why the matter was considered to be one of significance in audit and therefore determined to be a CAM, and how the matter was addressed in the audit. So we have to put three things inside. The one is the title. Of course, we'll come to that. Second, give the reference to the note in the financial statements where the CAM is, where that matter is highlighted. Then, why was the matter considered to be significant for the auditor? And why did it become a CAM? So you have to explain why it is a CAM. You cannot just go and put a CAM just because you felt that you want to cover this matter in some way. No, you need to explain in the audit report why it is a CAM. And second is how the matter was addressed in the audit. This is most important because we need to explain the procedures done by us. At the same time, we don't want to reproduce a work paper. We just want to give a brief overview of the procedures we have performed. The objective is that the reader appreciates the work done by the auditor, and he can appreciate the context in which the audit has been done, and not tomorrow make a statement that the auditor did not address this properly. So that's the reason we want to mention it. We will see this later. Now, there is only one case where a CAM need not be given, where the law or regulation precludes a public disclosure about the matter not allowed by law. In extremely rare circumstances, the auditor determines that the CAM should not be communicated in the auditor's report because the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits of such communication. So, if you have to ask me, I have not come across these situations. These are very specific, but I can think about maybe situations of very specific industries like defense or government or nuclear or some kind of industry like that, where we do not want such kind of information out in the public domain. This kind of information would be perhaps could be not there would be adverse consequences of this information in the market as compared to telling the public that this was a CAM area. So those are cases where you don't have to give a CAM, but there are very few. I doubt that we will come across these in our careers. Very few of us will come across. Okay, what is the professional framework to determine a CAM? How do we start determining a CAM? So as I explained, the CAM is the key audit matter. So we have to start with, so we have come towards the end of the audit, and we have to start with the matters communicated with the TCWG, which required significant attention during the audit. These are from, we take that list and we start from there. Okay. Now, what are the kind of matters that go to the TCWG? Let's put it that way, which are significant matters. Okay. What should we be communicating? So areas of high assessed risk of material misstatements, they commonly call RMMs or SRMMs. So significant risk, normal risk, these high risk items are normally those areas. Definitely they are high risk, so we do more audit procedure, we are more skeptical about it. So those should be highlighted. Occasions where we had to exercise a significant judgment in the area because that area related to a significant management judgment. For example, estimation uncertainty and accounting estimates. So this is a very good example that where management themselves had to exercise high judgment. Obviously, the auditor also comes into a position to exercise high judgment. So those areas become a key audit matter because it's a judgment. It's difficult. A lot of factors have to go into it to conclude that the judgment is fair. Okay. The next is the effect of the audit on the audit. So there's significant matters, there are risky matters, there are significant matters. How did it impact my audit? The effect on the audit of the significant events or transactions that occurred during the period. How did it impact my audit? Some events that took place, how did my audit procedure change or expand, or I had to do too much? These are kind of things that come into account. So by examining all the matters identified by the above criteria, we would need to decide which of those were of the most significance in the audit. Simple, very simple. So far, we are very clear on what we are looking for. We'll now proceed further on how we go about it. So if you have communicated matters with the TCWG, this process becomes fairly simple. Take the matters communicated with TCWG. Take the matters that required significant audit attention from those. Then take the matters of the most significance to the audit. You have now funneled down. So basically you funnel down and you will be left with a couple of matters at the most, which are of most significance to the audit. So we take those and now we are going to communicate. Now let's look at what do we look at each stage of the process. So matters communicated with the TCWG. So there are a number of standards on auditing, which include requirements that determine the nature, extent, timing of matters to be communicated to TCWG. So in addition to the requirements outlined in 260, communication TCWG, the Appendix 1 to 260 outlines 15 additional standards on auditing, which and SQC1 also, which also have communication requirements. So there are a lot of matters that we communicate with the TCWG. TCWG could be either the audit committee or it could be directly the board of directors. So let's understand there are matters that auditor must mandatorily approach the TCWG and tell them that these are factors during the audit that have happened. So what are those items? The plan, scope, and timing of the audit, including the identified significant risk in the audit. The plan to address significant risk of the material misstatement due to fraud or error. Plan to address areas of high assessed risk of material misstatement. Approach to internal control relevant to the audit. Nature and extent of the specialized skill or knowledge required, where I had to do additional work. Significant findings from the audit should be communicated to TCWG. And of course, auditor independence at the beginning and at the end, both times we must address TCWG on auditor independence issues. Now, these are some of the examples of matters that go to the TCWG. Now we will talk about, from them we need to choose the matters which will become a CAM. So how do we do that? As I mentioned earlier, we take the areas of the higher assessed risk of material misstatement or the significant risk identified in the file. That is a very good place to start, because as per SA 315, we need to identify risk and do a risk-based approach audit. So if we have identified high risk, then we can start from there, take those high risk, then we go down to the next level. Was there significant auditor judgment relating to areas in the finance statements that involve a significant management judgment, including an accounting estimate that may have been identified as having a high estimation uncertainty? The word uncertainty itself should make us wake up that, okay, we have to take care of this. This is something that has been estimated by the management, and it will be difficult for us to check as well. The third criteria is if we have told the TCWG any significant event or transaction that occurred during the period that had a significant effect on the audit. I can take a very good example. When COVID happened, COVID-19 came into place during the year, we had a significant event that had an effect on the audit. So there were companies that had difficulty getting the audits done. There were auditors who had difficulty getting audit done, and they can choose those. They went to the TCWG and explained how they did the audit in the COVID environment, and those could become matters of CAM. Currently, we are almost out of the pandemic. Thank God for that. And so we don't see these things anymore in the CAM paras. So which are the matters of most significance to the audit? Like I just earlier said, now from those matters, let's pick up what can be the most significant ones. Significance, what do you consider when determining the significance to the audit? Let's say there were areas where there was significance of interaction between engagement team, management, the TCWG. For example, matters which required in-depth discussions or frequent and robust discussions. So of course, these are matters that have been discussed. Mostly they are discussed from beginning of the audit till the end because they're important matters. So we can take that matter. There is an importance of the matter to the understanding the entire financial statements. So let's take that matter, which is so important to the FS. It is materiality of the matter to be considered. This is a very, very material matter that can be considered. The nature and the extent of the corrected and uncorrected misstatements associated with that matter. So this is a very good thing. I mean, if there was an area where we found difficulty in verification and there were lots of corrected, uncorrected misstatements, definitely that area qualifies to be a CAM. But care should be taken. We are not asking to reproduce the corrected and uncorrected misstatements. That is not required in the audit report. So take care. These are only indicators for you to identify areas where there were difficulties. This is not a blanket rule, and you have to not mention the misstatements on the face. Okay. Complexity of the accounting policy. Of course, a lot of people, when they came up with 115, Ind AS 115, Ind AS 116, they had a lot of complex accounting policies come into picture. And that was one of the strongest scams I've seen in financial statements. The nature and the extent of the audit effort undertaken by a management team to address a particular matter. Of course, the effort intensifies, it becomes a CAM. You have been working on that so much that your team you had to be increased, the time had to be increased. Maybe you involved specialists to help you in that area, a valuation specialist, or an IT specialist. So when you have intensified the audit effort, those areas qualify to become CAMs. Where there were difficulties performing our audit procedures that I've explained. The last one is something that indicates a difficult area, of course, existence of severe control deficiencies related to the matter. So when such areas are there, obviously auditor effort intensifies, auditors worry intensifies, and extra efforts need to be done to verify that area. So that's again something that could be of significance to the audit. So these are the factors that you have to consider before you choose a CAM. So these are quite self-explanatory. Let's now check out how a CAM should look, what should be in the CAM. So on the left, you see there are identified CAMs are something that should be there. It should be specific to the nature and activity of our client. It cannot be a general statement, okay? The other side you see across something that describes a boilerplate description. A boilerplate description is basically something that is appearing in all reports and it just goes like a statement in all the reports and it appears the same in every entity. So this is not the case. We did not do a CAM to give a general statement. We gave a CAM to do a specific statement to identify the nature and the activity of our client. So that's very important. Don't give general statements in the CAM. They need to be specific. They should be relevant and meaningful to the users. Okay. And the next is that they should be considered from the planning stage onwards. This is something good effective audit would make you conclude that if there is something important, a significant risk, area, difficult procedures, so all this would have been done at your planning stage. And then you would have progressed in the audit and you would have seen difficulties coming up and you would have finally involved, taken additional effort, time, and closed your audit. So this is a good CAM is something that has you have been working on through the planning of the audit, through the execution, till the completion, and now you are ready to give a CAM on it because it did actually take up significant amount of your time. And we always have this knowing or unknowingly because we do know client's business and we do know if he's gone into a new business or there is a problem in a particular area. Normally we do know in advance at the planning stage itself and we do focus our audit on those areas and identify those areas as high risk as well. So these are good CAMs. What we need to avoid is a discrete opinion for each CAM is not to be given. It's not a substitute for a modified opinion or the financial statement disclosure. This is something so important that draws the line between the CAM and other things. So it is not an opinion for each CAM. You are not giving an opinion on, let's say, if you give a CAM on revenue. It is not a substitute for a modified opinion. That is most important. If you are not convinced with the audit evidence in hand, if you feel that the evidence is inadequate, you feel the evidence is contrary, you have to qualify your audit report. CAM cannot be a way to avoid the qualification and tell the world that, look, I am highlighting to you that this area had some problems, but I did not qualify my report. You will not escape tomorrow if someone comes across and says, why didn't you qualify the report? A qualified report is a qualified report. It has its own standing. We should not touch or even think to consider making a modified opinion or qualification into a CAM. See, management would be most happy, but this is not the intention of a CAM. They may say, you are saying in the audit report, so you are covered. You have done your job. No, I will give a qualification. And in a CAM matter also, I am doing the audit. If I feel I am not convinced fully, I am not happy with the evidence, I am not sure whether the financial statements give a true and fair view because of this item, I will qualify the report and not give a CAM. Again, financial statement disclosures is not a way to give the disclosures and management says that I do not need to give the disclosure in the financial statement. No, that is not the reason we do a CAM. a substitute for reporting a material uncertainty relating to a going concern in the auditor's report. This is also one place, very important. People use a CAM as a substitute for a material uncertainty relating to going concern para. That is not the case. That should come out specifically. It is mentioned in SA 570. So do not try to put a CAM to do away with the going concern para and make your report look more credible. Okay. And of course, they are not to explain matters unresolved by the auditor. These are resolved. I have checked it. I am happy with it. So I'm telling the world. It's not to tell the world that I have unresolved matters. Okay. We have now discussed and understood how a CAM should come, what is the CAM, everything. Now we will talk about how do we go about writing the CAM? Very simple. How do we go about writing the CAM? So what is the requirement? So you need to make what is the description of the key audit matter? So you need to have a title. So there's a statement of fact, okay, that has to come. For example, the title can be impairment of loans and advances. One title, impairment of loans and advances, and then we will talk about that area and why it is a key audit matter. So the next part is why did the audit focus on this matter in the year? So you explain your rationale for determining the matter to be of most significance in the audit. This is a subjective statement and is based on professional judgment. So you don't have to take figures or something and match and say, you just need to explain in a subjective way why you felt this matter to be a CAM. So let's look at this example here. The identification of impairment events and determination of an impairment charge require the application of significant judgment by management. That is fact. Any impairment requires, determining of the event and the impairment provision. So in particular, with respect to timing, quantity, and estimation of the future cash flows. So here the management, or you are bringing out that there is a certain kind of judgment involved in doing impairment assessment. That's the reason I have considered this matter to be a CAM. Fair enough, we can say it. It's known by everyone. It is well accepted by everyone. So there is no problem in saying so. We need to explain. The next is the reference to the related disclosure. This is very important. You must draw the reference to the disclosure, whether it is the accounting policy or it is the detailed note in the financial statement which the management has given. Draw the reference to everything. It's not that we are trying to hide. Management is saying something, I am saying something else. No, you will supplement what the management says, and then you will talk about how you did the audit. So they have to work together. As we said in the earlier slide, CAMs CAMs push integration between TCWG and us and the management. So they have also written about that area. Let's say because of high judgment, they have also written about it in their financial statements. You draw reference to that and then talk about why it is a CAM and how did you go about it. So let's look at that ahead. This is an example of a CAM. So because of risk identified in that area, we are now identifying this as a CAM. So how do we write the CAM? This is an example. Let's read it together so we get an idea. As detailed in note 3 and 19, the group's Malian operations are subject to historic taxation claims by the state of Mali, totaling to $280 million. No new claims are made by state of Mali in the year. So first is the statement of fact. You have a title, taxation claims. That is the title of your CAM. You have the reference to the notes 3 and 19. I presume 3 is the accounting policy for taxation. 19 is the detailed accounting policy for the tax matter. Detailed description of the tax matter. Now, then you start talking about it. The group has taken professional advice with regard to the claims and commenced international arbitration proceeding during 2013 against the state of Mali, which remains ongoing, disputing the validity of certain of the claims. Given the material nature of the claims, so far I have made a statement of fact. Then I am saying as an auditor, given the material nature of the claims and ongoing nature of the disputes and the international arbitration proceedings, the recognition and presentation of any liability or contingent liability arising as a result of the taxation claim represents a key judgment and was a risk for our audit. So I'm explaining why it is a CAM. It's a CAM because the matter is in in the arbitration proceedings, and that's the reason the contingent liability becomes a difficult area to check, to assess, and has high risk. And that is the reason it is a lot of judgment is involved, and that is the reason it's a risk to audit and it is a CAM. Very simple, very beautiful example, and non-disputable example. So simple, you have described the CAM. Now let's move further. How do we describe the audit procedure? So we have given the CAM here. This is the CAM. This is what was done. This is why it was a CAM. Now we have to explain our audit procedure. This is the most important part, because this is where we get to say what was our pain, what was our difficulty. So what do we have to say in the procedures done to address the key audit matter? This is the guidance of the standard, and then we will talk about how much to disclose. The amount of detail to be provided in the auditor's report to describe how a CAM was addressed in the auditor's report in the audit is a matter of professional judgment. So first, the standard has put it on you. Use your judgment what you want to say. They are not mandating any procedures to be specified there. They have said this is up to the auditor to say. That is the reason if you go in the market and see the various CAMs coming out, you will find some are short, some are long, some are very, very long, going into 2 pages. So it is a matter of professional judgment. Okay, it is not fixed. The aspects of the auditor's response or approach that were most relevant to the matter or specific to the risk of material misstatement. So what procedure I want to say there? I want to say the procedure that was most relevant to that matter. So let's say inside the taxation, you have a taxation issue in Mali. I want to talk about procedures that were done for Mali. Okay, for checking that tax status. I don't want to talk about the other countries, right? So we have to talk about the relevant checking on that area, on that particular part. The other part I want to talk about, wherever I saw the risk, I will talk about what I have done to address that risk. It's very simple. If I have seen a risk in the financial statements or risk of material misstatement, I have to tell what I have done to address that risk. Very simple. The next part says give a brief overview of the procedure performed. So we do not have to go detailed. We don't have to reproduce the work paper. No, we just give a brief overview of work done related to that area and work done to address that risk. So let's look ahead how this should unfold. Now, here we have an example of impairment of loans and advances. So the question that they're trying to draw here is that we should not be giving an opinion. Okay, so we'll look at the CAM, how it is mentioned, but we will also pick up the mistakes that are being made here. So that will help us understand why we should not use words like the ones highlighted here. So let's say there is a CAM on impairment of loans and advances, and we are talking about how the audit was done for the impairment of loans and advances, how we did the audit. So we are in the CAM describing the audit. So we are saying we are satisfied that the impairment events occurred in the current financial year with management decision to impair these assets. We have found the judgment management have made in determining the quantum of cash flow which impacts the impairment charge to be appropriate. Now the mistakes made here is fine. We have mentioned that there is a management decision to do an impairment, and we saw the judgment and the cash flow, but the wrong words have been used. So use of the word satisfied and appropriate. These are the words that we have used. And it could imply that the auditor in this instance has resolved the issue and reached a conclusion as a result and could be interpreted as providing an opinion. So using the word satisfied is appropriate. You cannot use these words on a particular area. We gave a true and fair view on the audit report. We cannot give it on a particular area. That is the reason we have to avoid the words like satisfied, appropriate. Let's see some more examples. Application of IFRS 10. Overall, we have found management judgment to be acceptable, and I have noted that the significant judgments have been appropriately disclosed in note 31-32 to the financial statements. Again, use of the word acceptable, appropriately, provides an indication that auditor is sharing their view. He is giving a potential opinion to the world on the judgment and significant judgment made by the management. That should not be the case. Business combination, let's say we say the words, we concur with the management judgment and outcome of the procedures. This is also wrong. We don't want to say the word concord because it implies agreement and it could be interpreted as an indication of an opinion on the part of the auditor. So the point that we are trying to drive here is that you do not want to tell the world that this area is proper, this area is acceptable, this area is fine or satisfactory. No, we just want to tell the world what that area has and what procedure we have done. We do not have to give our conclusion on every procedure. Okay. The objective of the CAM is to highlight to the world that I have done these procedures, that I had difficulty. Instead of one or two procedures, I did maybe 5, 10. I want to pick up the most important ones and tell the world, maybe I did more risk assessment. Maybe I checked the disclosures more in detail. Maybe I involved a specialist, like a valuation specialist or IT specialist. Perhaps I did additional sampling, or I have picked up a full sample. Um, these are the words, things that I would like to tell the world that look, I have gone deep in this area. I have done additional efforts. I have done excessive work. Okay. We do not need to give the conclusion because the conclusion is that the area is fine. Because I am not qualifying my report, the area is fine. So we do not have to tell the world the opinion on the area. The opinion is appropriate only. The area is fine. After that only I am signing audit report without qualification. Okay. So I just want to tell the world, these are the significant judgments. This is the reason I consider this to be a CAM. This is the reason, these are the procedures I have done. Stop, full stop. Okay, so here is a quick description of a good CAM and what are bad CAMs. So good CAMs are entity specific, they are clearly written, they are balanced and objectively presented, they're insightful, so it should give some information to the reader. It is logically presented. What is the bad CAM? It contains a surprise for management and TCWG. This should never be the case. It should never be that management read a CAM and say, oh my God, what is this area? Let's go back to the beginning. CAM was something you had already communicated to management. They are aware. They have put a note in the financial. You cannot go and suddenly give them a surprise. That is the reason communication with TCWG is must to ensure, good CAM. It cannot contain a boilerplate language. As I said, no general description, specific, NDC specific, knowledgeable description. It cannot be a duplication of a disclosure in the financial statements. CAM should not duplicate any disclosures. Give reference. It should not provide any opinion on a CAM item, either we just discussed. It should provide a CAM in error when a modified opinion is required instead. We are not allowed to do this. You cannot drop a qualification and make it a CAM. CAM is a CAM and a qualification is a qualification. They cannot be too detailed, like I said, and complicate the issue. I have seen CAMs that run into 2 pages. While I do not say it is not required, if that industry requires such kind of a disclosure and a CAM, it is fine. But it should not unnecessarily get complicated, and towards the end, the user is lost. What exactly happened? So avoid too detailed CAMs and don't complicate the issue. Make it simpler. Remember, the user of the financial statements is the general public. They should be able to comprehend the matter. It can be long, but they should be able to comprehend the matter. Okay, that's done. Just example, how should we go about writing the CAM in the report? Put a title first, then put a description of the CAM, reference to the related note, and why the matter was determined to be a CAM, and then how the CAM was addressed in our audit. Let's say there are more than one CAM, it can still go one below the other, or you can even make a table. So in the table, you can break it into 3 parts: the serial number, what is the CAM? So we have the title, description, and why it was a CAM. And on the right side, we can write what were the procedures to, our procedures carried out in respect of the area. What were the audit procedures done? How did we address the CAM? This can be mentioned on the right side. So this is also a very, very good way of in the audit report giving the CAM and the procedures side by side. I think this is the better way because it allows the person to exactly match the procedures, the why it is a scam, and then read the procedures. It is more visually accepting and appreciating. So let's look at what are the typical scams that we see, which are most common. Most common impairment assessment. This is the most common scam because we all know impairment is a judgment. Many times it is a judgment. Even if it is based on the cash flow is a judgment. There's a lot of uncertainty involved. We saw a lot of impairment scams during COVID-19 because COVID further made brought estimation uncertainty, and further made judgment difficult. So already I had a plan, let's say 5 years. This is my plan. This is how I want to done my impairment assessment based on a cash flow of 5 years. COVID came, it impacted that cash flow of 5 years. So already there was an uncertainty and judgment, more uncertainty and judgment. So definitely impairment assessment becomes a scam. Many other factors impact impairment assessment, which are also very judgmental. So let's talk about other factors besides cash flow: technology, jurisdictions, so international borders. Recently, we have the Ukraine and Russia war. This is something many people have not understood, but there was a lot of disruption in business. If you are a Ukraine person doing business with Russia, definitely your businesses were impacted, sanctions were put, and many companies had to sell off or write off their assets in Ukraine or Russia. So many countries that did business with Ukraine and Russia had to immediately impair the assets in Russia or Ukraine, because no longer can they claim those assets or those bank balances, and they lost control of those entities. So political jurisdictions, political issues, war issues, um, our relationship with any neighboring country, all these, when they undergo changes, impairment takes a hit. So impairment is a very judgmental area, and I think everyone accepts that normally in a CAM, you will always see an impairment assessment as a CAM. The next one, most commonly seen, this is in case mostly I've seen for entities with multiple tax jurisdictions. So because this tax net is spread across the globe, it becomes difficult to say in which country what will I be allowed based on the allowability, or sometimes they are tax havens, sometimes they're excessive tax areas. They're subject to transfer pricing arrangements. So you see taxation issues coming up in a lot of CAMs. Especially if you have deferred tax assets, which are difficult in times of COVID. Again, deferred tax assets became difficult to recognize or continue with recognition. So they came into CAMs. The most common area in complex in entities is the revenue recognition, especially in today's world where we have revenue going across digitally. We have multiple revenue models. 115 brought about a need to go into every contract and break down your revenue recognition models. So I have seen majority companies get into revenue difficulties unless it is very smooth. Revenue recognition continues to remain the #1 difficult area to audit because of complex accounting standards and complex business, both. The provisions and contingencies, again, of course, we need judgment, whether they are remote or not, whether their estimate is proper or not, so they become CAMs. The most common, again, accounting for financial instruments. Any instances where we are converting FVTPL to amortized cost, or we are taking judgments in equity accounting for financial instruments as an equity or a debt. These all take a lot of judgment. So it is a very good idea to bring this out as a CAM. So the reader of the financial statement knows that this is something that I have to focus on. I have to understand that the auditor also had management need to make a judgment. Auditor also needed to make a judgment. So it's a complex area. Business combinations, financial instruments, these are things that definitely as auditors, we must highlight to the world because they are anyway complex areas. So they are already 50% in the camp. The remaining 50% is what we have to decide. Next one is, yeah, we've seen this illiquid assets and liabilities. The valuation of illiquid assets and liabilities becomes a difficult area for every auditor because there's no quotable price, and that can be a scam. IT systems and controls today have become matters of difficult audit, testing. It was bound to happen the way we are going about integrating softwares into every aspect of business, whether you call it sales, whether you call it purchase, with the inventory management. So the IT system becomes the base, the cloud computing that is happening, the big data analysis. These all become complex softwares that are coming into picture and are driving financial modeling and accounting. So especially the online platforms. So every auditor today in large entities needs to involve specialist. He needs to involve an IT specialist to help him with these kind of areas. And let's face it, we are not sometimes we are ourselves searching around for solutions to understand IT system. As accounting standard ISA 315 also lays a lot of focus on how to consider IT system as a risk. It is like something today by default in every entity look at the IT system as a risk, because if you don't have proper IT system, the entire financial statements is being built on an IT system which will collapse. So the IT system is a definite system and controls is a definite focus area of every audit. Number one, if they are complex IT systems and they have a lot of risk involved, definitely you can identify this as a CAM. You can mention what do you do to check the IT systems and controls involving specialists, additional time, additional vouching verification, all can be brought out to say that how you got comfort on systems and controls. So they definitely qualify as the CAM. The last one I have seen is the industry specific accounting treatment, because user may not understand the accounting treatment, and if every industry specifies a different accounting treatment, then it definitely becomes a CAM area, because it's difficult. It's not exactly as per the Ind AS or the AS. It's not exactly as per the general principles. At the same time, there is a law and there is an industry that is specifying the accounting treatment. So bring these matters as CAM. They are difficult matters for auditors as well, and they need a lot of judgment to decide whether to follow or not to follow that. Okay, so these were all the typical CAMs that come into place. And I think we have fair understanding now what becomes a CAM, what doesn't become a CAM. I'll quickly take you through where is it, what are the other FAQs on CAM, where is it applicable. So the most important is that the third one, I like to take that up first. CAM is mandatory for the general purpose financial statements of listed companies. So 2 parts to remember in this: only in general purpose financial statements, not in special purpose, okay? And only for listed companies. CAM is not applicable to other companies. When it is voluntary application of CAM can be done when the auditor decides to communicate with the TCWG, or if there is some other law, let's say the RBI or the IRDA mandates that a CAM should come, then we can put a CAM in the report. Otherwise, we should not be putting a CAM in any report, except for listed companies, and that too general purpose financial statements. I'll now go to the first one. Is it applicable to an interim financial statement? This is a tricky question, such as a limited review or half-yearly audit. The answer is no, it is not applicable to an interim financial statement. Is it applicable to a tax financial statement audit report? Now, that's also a tricky question. The answer is no. It is applicable to the general purpose financial statements, not to the tax FS. Let me come to the last section where we talk about what do we do if we have a different type of opinion in the audit report. The first one says if you have given a disclaimer of opinion in your audit report, you cannot give a CAM. I think it is very logical to understand that if you give a disclaimer, you are saying that you were unable to audit the entity. And if you were unable to audit the entity, how did you identify a key audit matter? So it's quite logical that if you have disclaimed your report, you cannot give a CAM. Similarly, if you have given a qualified opinion, you can give a CAM. There can be a CAM in addition to the qualification. If there's an adverse opinion report, in that report also you can have a CAM. Okay. If there is only an emphasis of matter para in your report and it's a clean report, here as well a CAM can come. Okay. But the CAM should not be a substitute for the EOM. Okay. So that we'll see later, there is a difference between an EOM and a CAM. You should not be trying to substitute the EOM with the CAM. See, for managements, it's sometimes convenient to push the EOM into a CAM because then they say that is the auditor's problem. It's not something in my financial statement that needs attention, because the exact definition of an emphasis of matter is something that requires attention in the financial statement, and a CAM is something that the auditor wants to draw attention. So there becomes a fundamental difference between the two. So a CAM should not be given in replacement of a EOM, and managements may want to push you to make a EOM into a CAM because that brings it out of the purview of their financial statements. So some more things to understand a CAM. Different entities in the same industry, can they have a different CAM? Yes. Different entities in the same industry can have different CAM. Normally, you will see the same CAM, like all banks, insurance will have a same CAM, but definitely they can have different CAMs. It's not allowed. Is a significant risk area always a CAM? No, it has to be individually evaluated. All matters communicated with TCWG are a CAM? No. So all matters that are communicated with TCWG are not CAMs. Is it possible that there is no CAM in the audit report? Yes, it is possible that there is no key audit matter identified. But you need to really take the matters communicated with the TCWG. You need to narrow it down to conclude that there is no key audit matter you want to communicate in the audit report. So it's not as simple as just leaving the work paper blank, because 701 is an account auditing standard. You need to demonstrate the compliance. So you need to do those procedures. You need to take the TCWG matters. You need to identify the significant matters. You need to identify the significant auditor attention matters, and then conclude that there are no CAMs. Okay. Is a going concern para a CAM? No. So we don't give a CAM normally for a going concern area. We give a CAM, we give a material uncertainty relating to going concern para, which is described in SA 570, which is actually a CAM only in a way, because we are very descriptive in it. We explain the reasons why the company has an uncertainty, but it continues to operate as a going concern. Is there any order of the CAM? There's no specific order, but I would say take the important matters and the material matters on top and the less material matters down. Yeah, so as I said, is a going concern as a CAM. So as per 701, key audit matters, a material uncertainty related to going concern may be considered to be a CAM and reported in accordance with SA 570. So thus, a material uncertainty related to events or conditions that may cast significant doubt on the entity's ability to continue the going concern is by itself a nature a key audit matter. So SA 570 going concern already specifies us to take care and highlight the material uncertainty relating to going concern. We can go more into this, but this is better left for a separate topic on this altogether. Now, what's the interplay between emphasis of matter and the key audit matter? So when a matter has been determined to be a key audit matter, the auditor is required to include the matter in the audit report in accordance with SA 701. We just discussed that. The auditor should not use an EOM paragraph or other matter paragraph to highlight the matter instead of the requirements in SA 701. This is important because the EOM or other matter paragraph cannot be a substitute for reporting the matter as a CAM. So don't go that way. If you decide to keep it a CAM, it falls in the criteria, you should keep it there. It should not become an EOM or an other matter paragraph. We will discuss EOM and other matter para in just some time. Then there may be a matter that is not determined to be a key audit matter as per 701. If such auditor considers it necessary to draw users' attention to such a matter, the matter is included in an emphasis of the matter para and audit report in accordance with 706. Let me walk you through that. Very interesting. You have a matter. Management is saying it is significant. He has given the note in the financial statement. Okay? That means it's an important matter. But it wasn't that complex to audit. It wasn't a key audit matter from your perspective. Okay? So your evaluation, you communicated to TCWC, but it is not a CAM. Since, or largely it is seen, since it is already a matter having significant judgment by the management, they have given a detailed note in the financial statement. It is very much possible that that matter is not a CAM, but can be an emphasis of matter. So that finds place in the EOM paragraph, and we'll understand in some time what is an EOM paragraph. So just to make it short, it's a significant judgment matter. It's a significant material item in the financial statements. But since we didn't find it to be a key audit matter, we may, of course, it should fall in the definition of emphasis of matter criteria. It may consider to be a emphasis of matter. It's a good thing that the standard specifically brought this out, because it is a bit confusing sometimes, right? But what you need to see from your standpoint is this important for the user's understanding, or what something that the financial statements understanding, or it is important for the auditor's audit understanding. Audit understanding becomes a CAM, financial statement understanding becomes an EOM. Perfect. I'll just take a sip of water and let's continue. So that was an overview of a key audit matter. These are applicable to only listed entities, but it was a great platform for auditors to start voicing their opinion on the difficult audit areas. Now let's come back to EOM and other matter paragraphs. These are important because these still stay. They have not gone away. We still have to take care that we are emphasizing matters, because it's not that it is only auditor's judgment. Some matters by itself are very apparent to be an emphasis of the matter, and an auditor should not miss this, because then it becomes a non-compliance of SA 706. So just to again clarify to you, 701 and 706 are all talking of professional judgment. All of them, both of them. But it is not that it is your free will, or you will include it as per your will or your whims and fancies. No. If any other auditor looks at your report and financial statement or your file, and for him it is very apparent that this matter should be an emphasis of matter, or this matter should be a CAM, you would have not complied with the standard of auditing. So any review, any inspection can pick up that you did not follow it. We cannot take the shelter of professional judgment all the time. We need to have professional skepticism as well, and we need to appreciate that some things are by very nature a CAM or an EOM. So at least need to be evaluated. If you're not going to put it in, you have to evaluate that matter and then decide. So EOM and OM paragraph is fairly simple. I will just quickly brush you through this. This is not something very complex. So let's talk. So I've put down both the definitions here. So 706 deals with the additional communication or the report when the auditor considers it necessary to draw emphasis of the matter. Where is this? Draw attention to matter presented or disclosed in the financial statement. I'll stop here. Because this is something everyone forgets. EOM has to be matter presented or disclosed. It cannot be a matter that is not in the financial statement. It cannot be such a matter. It has to be a matter presented or disclosed in the financial statement. Full stop. I have had several discussions and several arguments with engagement teams or even clients Okay, you mentioned this in your EOM. Sorry, I can't mention anything in my EOM. I am not here to mention anything from my side in the EOM. I am here to draw attention to your matter in the financial statement. So you disclose in the financial statements, you put the right disclosures, you put the right information, the management has to do it. I will draw attention to that information. Sometimes managements do not want to mention matters in their financial statement, but they will tell the auditor, you put it in your EOM if you feel it is important. I'm sorry, that is something that is important to your financial statements. You have to put it in. Only then can I draw reference to that matter. Whether it is an amount, let's say a financial statement item that is appearing in the financial statement. It can be an amount like debtors or ECL or inventory or investments, or it can be a detailed note in the financial, but it has to be presented or disclosed in the financial statement. Full stop. Now we'll go forward. That are of such importance that they are fundamental to user understanding of financial statements. So this is the test, that it should be important for the fundamental understanding of the user. Now this is where it gets a bit tricky, but we have to use professional skepticism. We have to use our judgment and decide that. An emphasis of the matter is not a substitute for. This is something very, very clear when this came in the first place. It is not a substitute for a modified opinion. It's not a substitute for a disclosure in the financial statement to achieve fair presentation. And it is not a substitute for reporting in accordance with SA 570 revised. Like I said, SA 570 revised requires specific audit report, specific para in the audit report on the material uncertainty relating to going concern. You cannot do away with that para and give an EOM. This is what it's trying to say. Okay. So this is very clear. It's very simple. Let's go to other matter. Other matters are matters where auditor considered necessary to draw attention to any matter other than those presented or disclosed. I'll quote that. So it becomes opposite. Other than those presented or disclosed. So if anything is presented and disclosed, it becomes an EOM. Other than presented and disclosed, it becomes an other matter para, which are relevant to the user understanding of the audit, the auditor's responsibilities, or the audit report. So 3 test criteria for an other matter para. Either it applies to the, it basically, they are relevant to for the user to understanding the audit, auditor responsibility, or audit report. Three criteria. So if it meets any of these criteria, it will be an other matter para. If it does not talk about these 3 matters, it cannot be an other matter para. Okay, let's move forward. Now, what does this not include? Other matter does not include requirement to be disclosed or presented in the financial statements. So you cannot obviously give the disclosures there in the other matter paragraph. Okay. Information required to be provided by management. So if management wants to say something, he has to say in the notes. He cannot tell you to put it in your other matter para. I have seen instances where management requests you disclose this point in the report. I want to communicate it to my prospective investor. So just mention in your other matter para. No, I will not mention anything in my other matter para for you. Information which is prohibited by law, regulation, or professional standards. You should not include that. So let's move forward. Where do we require an EOM? Now, so now these are matters where do you put an EOM normally? Normally, it can be anything. I'm again saying it can be anything presented or disclosed in the financial statements. But normally, where there's an uncertainty relating to the future outcome of an exceptional litigation or regulatory action. These matters normally always become an EOM because there is uncertainty in that matter and it relates to a future outcome due to some regulatory action or litigation. Now, the thing is, fine, it's uncertain, right? So let's put understanding here. You have not qualified the audit report, so this matter is not a subject matter of qualification. You have drawn a view that it is appropriately presented and accounted. So let's say the contingent liability basically is proper. We are not arguing on that, but we want to tell the user that look, all said and done, accounting standard applied, professional judgment applied. In the financial statement, there is this line item, this one FSA, which is subject to litigations. That amount is subject to litigation. So you may want to be aware. Let's say you are a potential investor or a regular investor, you may want to be aware. So you are drawing reference to that in the audit report. Fair enough? Understood? Next, a significant subsequent event that occurred between the date of the financial statements and the date of the audit report. So a subsequent event of obviously you know that once the balance sheet is signed, balance sheet date is over, if some event comes up, you may want to tell the user that look, fine, you understood the balance sheet, it is true and fair, but there is a subsequent event that has happened, and you may want him to just read the note on that subsequent event before he goes forward. Let's say you get a license or you lose a license or some merger or demerger happening. That is something very good to highlight in emphasis of the matter panel. Early application of a new accounting standard has a material effect on the financial statement. So if we are doing something like this, rarely done, but if we do early application of an accounting standard, we should draw an EOM. A major catastrophe that has had or continues to have a significant effect on the entity's financial position. Example, of course, we all know COVID-19, which took us through like hell, right? So everyone gave EOM on that. Everyone, even managements wanted to draw attention of users. They themselves put detailed notes in the financial statement telling everyone that look, COVID came, we had trouble, we tried, but we have done the audit. We have done the business principles are fine. If they maybe took some impairment hit, maybe they took some estimation hits, let them explain it in the note, and that matter could be explained. We can draw attention to the COVID impact in an EOM. I believe every company used the EOM paragraph. Every auditor did it to highlight the impact of COVID. So accounting impacts of COVID that were actually taken, like by banks or where they got moratorium periods. Bank got moratorium period during COVID, right? There or in the any company that had done an assessment of the impact of COVID and wanted to tell the world that we took a certain hit, bad debts or something. They drew a note, and auditors very well drew reference to that note in the audit report. It's a very good example of us communicating with our stakeholder that look, everything is fine. This is the basis. This is how it was. Please understand. Please appreciate the financial statements. It's a very good thing that we all did. The last line is NFRA recently in one of the, I think IFS report said that the EOM was inappropriate and a soft reporting of a serious matter. So this is exactly what I was trying to draw reference to you earlier, that the EOM is not a substitute for a modified opinion. The EOM is not a substitute for a modified opinion. Again, please do not use this or let managements convince you to use it as an escape from a modified opinion. Okay, so what are the examples of an emphasis of the matter? Let's quickly run through this to understand. What's the impact of COVID-19 that I've just discussed? A lot of companies use that. The recognition of any income or expense subject to revision rates by authorities. I have very often seen this in especially power companies, electricity supply companies, where their tariffs are subject to a lot of revisions by authorities. So they draw reference, they account for the income, which is as per the law, but they draw reference to the the tariff orders and mention them and we highlight them as an EOM, right? Pending litigation, we just discussed, a lot is done. Merger and demerger is something that definitely should become an EOM. It is something we have to highlight to the user that your company where you have invested shares is going for a merger or is going for a demerger. So as an owner, or let's not just say investors, I'm even talking about bankers, creditors, the debtors, they must also be aware that the company is going for a merger or demerger. So please draw references in an emphasis of the matter para to the disclosure and the financial statement regarding the stage of merger or the demerger. So the stage, at which stage it may be RBI approval or SEBI approval, you can draw reference to the stage or ROC approval and mention that. If there are any non-compliances related to the company act, of course, not material ones. Material ones would be qualified or appear reported elsewhere. But if company wants to highlight certain factors that they do not have a CS or they do not have the MD or something, they can use an EOM too. We could draw reference to those important non-compliances through an EOM. Last is the like a subsequent event effects of the fire. Like, so what happened after the balance sheet date? You want to explain something is explained in the note. Definitely, we should draw reference to such a matter as an EOM. So the above examples are only illustrative. A detailed evaluation of the fact need to be carried out before concluding on the same. I have to put that disclaimer because everyone will assume that this is for sure an EOM. So please evaluate, go through it carefully, and decide and document your understanding of it. Okay. This is the little tricky part, but very useful. Where do we use the other matter para? So let me tell you where we can use the other matter para. So that point that came out during COVID-19 was there were a lot of travel restrictions at that time, and many firms worked with other firms, or they worked with alternate procedures to get evidence of physical verification. So physically, we didn't visit those locations. Maybe we send other people from there, local people, or we engage another CA firm to help us with the physical verification, or we use audio visual means as well to do physical verification. So we verified books of accounts, books of entry online, and sometimes company did the physical verification through a video conference. So we did alternate procedures to do physical verification, and this is something it's not wrong. We did it. We were convinced. We found evidence, but this is something you can bring out in your other matter para, because it is about your audit, how you did your audit. So you can tell the world that this is how we had to do the audit, and just want to inform that this is what we did, because last year it was normal, this year it was different. So you can tell that in the other matter para. Wherever your comparatives are not being audited or not audited by you, that can be mentioned in the other matter para. Where the financials was audited by another auditor in the previous year, this is a mandatory disclosure that comes from SA 510 or 710, 510 and 710, which are the initial audit engagements. You need to mention that the previous audit was conducted by another auditor, and you have to mention what opinion he gave also, clean or modified. And if it's modified, you need to mention where it was modified. So these matters. So basically, your audit is fine. You have done a clean audit. You have done audit. You have got evidence. You are fine. You just want to highlight the reader that last year was done by somebody else. That's it. There's no qualification matter here. It's just information that last year was done by somebody else. In a way, I'm giving my responsibility was for this year. Previous year was somebody else's responsibility. That's all I'm trying to say. We in the SEBI disclosures which came about for listed companies, they described like an other matter para on the balancing figure. So if the differences or comparatives have been determined based on full year minus say 6 months, and that balancing figure you can talk about and say that this is how it was arrived in the other matter para. The most common other matter para that we all have seen and recommended in all the publications that come is for the consolidated audit report, also prescribed in the guidance note on audit of consolidated financial statements. So the other matter para has to bring out that which components or how many components were not audited by us, audited by other auditor, or audited by, or not audited and based on management accounts. So let's understand this. In the other matter para, you are telling the world that in this console financials, there is a certain part which is not audited by me, it's audited by someone else, and which is perfectly fine. And there is also a part which is not audited and based on management certified accounts, which is also fine. But if it is material, if the unaudited part in a consolidated report is a consolidated financial statement is material, definitely you have to consider whether you would want to qualify your report. That is a given. Okay. So we use the other matter paragraph to carve out responsibilities, allocate, disclose, show my job, how did I do it, what part I am responsible, what part another is responsible. So this is a very good para that we must use. It's in our favor to tell the world how we did, because the auditor responsibility is very, very comprehensive. So this is a good place to demonstrate your, responsibilities. Okay, so this is the quick talk on if we go to consolidated reports, how should we look at, other matter paragraphs or UM. So as I said earlier, the other matter paragraph in a console report, so on the component auditor, audited by another auditor, or not audited based on management accounts, you have to consider materiality. Like I said, if it's material, you may have to evaluate a qualification in the console report. The other matter, the component being a foreign entity whose financial information is prepared as per GAAP, accepted in their local jurisdiction, and we audit the conversion adjustment. So this is very common in international businesses, where the subsidiary report comes to us audited, but it comes in their GAAP, and we do a conversion to, let's say, AS or Ind AS, and we audit the conversion adjustment. So it is audited, okay, but their part was their GAAP. It was audited in their GAAP by their auditor, and then conversion adjustment was audited by us. So we can mention this in the other matter para, so as to show our responsibility. The next part talks about more from a materiality point of view. So if there's a qualification in your component or an emphasis of the matter para in your component report, in the standalone report of the component, you have to take care when you go to make a console report, where looking at the materiality and the group level materiality, not only quantitative, qualitative also. Okay, whether that qualification appearing in any of the subsidiaries or components should go in the console report is something you need to judge. Whether even an emphasis of matter, even a going concern matter, if it's a very small subsidiary with a going concern issue and your parent is very large, you may not need to, it does not impact the console going concern, right? So you don't need to reproduce the going concern para in the consolidated audit report. But this all requires judgment, all requires evaluation of materiality, which everyone understands we have to take care of, and we have to document. That is the most important thing. Again, I said the last part also deals with similar reporting requirement. If there's qualification or remarks on a CARO report in the component auditors, then you need to mention that in the console report as well. Because CARO is factual reporting. So please ensure those details. Now, so for us to see whether what we have understood and whether we are on the same page, let's read an FAQ. So if an auditor disagrees with or is uncomfortable about the recognition, measurement, disclosure, or presentation of a transaction in the financial statement, can he highlight it as an emphasis of matter paragraph? So basically, you are not comfortable with audit evidence, basically. So can we give an EOM is the question. The answer is absolutely no. It's important to note that the EOM para is given only in respect of matters that are appropriately presented or disclosed. That means from first only they should be appropriately presented or disclosed in the financial statements, and we should have been comfortable with it. Okay. This means that the auditor should and is deemed to agree entirely with the treatment of that matter in the financial statements. In case the auditor has a reservation about a matter, he needs to qualify the matter. Goes without ask what I have been explaining, that please don't mix. Again, the message, don't mix or don't mix up a qualification and an emphasis of matter. Okay. So where do we find a lot of information to guide us on communicating key audit matters in the report or on EOM and OM paras? So I have listed down some of the very good resources, extremely good resources issued by ICI on these points, on these matters. So the 701 standard by itself is very comprehensive. And if you read the 701, it will give you a full understanding of key audit matters, where to put them, how to disclose them. And I think no one will have a confusion once he reads the standard by itself. There was also issued by ICI an implementation guide to the standard on auditing 701. That is the communicating key audit matters in the independent auditors report. So there's a specific implementation guide on 701. So that is also very comprehensive with examples. So that will guide you a lot on how to draft key audit matters. Then coming to emphasis of the matter, other matter paragraphs, they are both contained in only one standard, SA 706. Okay, so 706 has all the requirements to understand what we have just discussed on what is an emphasis of the matter and other matter paragraph. The criteria are clearly specified in the standard. If we meet the criteria, it's an EOM or other matter paragraph. If we do not, then we cannot mention that matter as an EOM and OM paragraph. It's very, very clear. I think we've already discussed this right now. There is also an anthology on CAM and other reporting in the audit report 701, 705, and 706. This is a very, very interesting publication. I would in fact like to show it to all of you. A very beautiful cover publication, which has, it's like a data bank of 701, 705, and 706 matters. And it's a very quick reference guide for anyone who's looking for, let's say, a CAM on any auditing standard, relating to any auditing standard or any EOM. Relating to a particular industry or a standard. So it's quick search it's quick compilation of 701, 705, 706 reportings in the market of listed companies. So it's very, very useful. The one matter that is not mentioned here is the implementation guide on audit reporting standards, that is 700, 705, 706, 720, all of them covered. That is a very, very beautiful publication issued by ICI. It covered all the standards. It has FAQs in them, and it has examples of all. So it has illustrative of all the standards inside. So 700, 701, 705, 706, 720. So all kinds of permutation combinations can be seen in that implementation guide. So that's really, really good base to clear all your doubts, because this all came recently when these standards were revised. When 700 got revised recently and the format changed and the opinion went up, I think people here will agree. Earlier the opinion was down, now the opinion is right on top, right? So this came out after that, so it became a very, very good clarity for everyone on how to do reporting. So I'll run you through this. Okay. If you look, I'll just share my screen to show you the two publications by ICI, which is very, very useful. I find it extremely useful for me. Okay, is the screen visible? I guess it's visible now. Yeah, so this is called the Implementation Guide on Reporting Standards 700, 705, and 706, issued by ICI. And it's a very good publication. Like I said, it has chapter-wise talking about all the standards that we just studied. And it has illustrations for 700 revised, 705 revised, and 706 revised. So this gives a very good, place to start with all kinds of And you can see here there are all it's all FAQ. That was a really good thing that we saw. Each standard is dealt with as an FAQ here. That was a really good idea. Whoever came up with it. That so is it so? For example, very simple. Is 700 revise applicable to reports and after 1st April 18? In emphasis of matter also there are so many good questions. Who should the report be addressed to? So these are qualification. We come to 706. Yeah. So this is the FAQs that deals with 7 emphasis of matter and other matter paragraphs. Please excuse my voice. I think it's quite. First is all applicability part. So again, we spoke of this. What kind of circumstances may require an EOM? Will key audit matters be emphasis of matter paragraphs? Will all emphasis of matter paragraphs be a key audit matter? What is another matter paragraph? How is it different from the EOM? This is one we just discussed. So, as I said, these are FAQs, which it may be that you are dealing with a client situation where you have exactly the same matter. So it's really helpful. The other document issued by WIRC is this anthology on CAM reporting matters. So this is covered an index. So here you are. It's very good data bank. We got the industry name, we got the number of companies, we got a qualification. So if you want to see a qualification in the construction engineering industry, you will get that. If you want to see a material uncertainty relating to going concern, you'll get that. You want to see key audit matters, just look at the number of them here. So amazing. Just in one place, you got like cement industry, you got 33 CAMs. So it gives a very good idea of the CAM available, of what kind of CAMs are going in your industry. So it will really helpful for auditors to understand how the CAMs are being reported in different industries, because definitely the nature of risk is same in all the in the common industry. So this is a very good place to look at this. And then we also have the emphasis of matter paragraphs and other matter paragraphs. So these are of course for listed entities. Other industry entities cannot be out there in the market in the open. But these are some of the industries that have been covered. The names I mentioned here. So just wanted to quickly, just show you all, and everything has been reproduced here in tabular form. Okay, so I just so that is a very good example where you can quickly go and get some idea of how to draft an EOM, how to draft a CAM, and how to draft other matter paragraphs also, which are very few actually. Even if you see the standard, they're very few. But having to go and look at these kind of reports, it's really nice that you have a data bank where you can go and check these out. Okay. So that brings us to the end of my conversation with all of you, trying to highlight the great initiatives taken by the ASB in making these standards applicable, in making it more easy for auditors to communicate with the stakeholders through CAMs, other matter paragraphs, EOMs. And it's just wonderful that as auditors we can now communicate, which was not the case many years ago. So my of course request is that you use these paras as much as possible to communicate with the stakeholders, and that's the best way we can bring credibility, we can bring appreciation to our work, and bring appreciation to the effort involved in doing audit and the limitations of an audit as well. So that all being said, I have been speaking for quite some time. I am now done with the session that I had to explain. Any questions?
Thank you so much, Sir Alimji. Thank you so much for detailed deliberation on both these standards. I have received certain queries. Sir,
Yes.
first question is, when an item is covered under CAM, it is necessary to qualify the matter again, specified in CARO again.
No. See, the matter is not qualified. It is only being disclosed as a CAM. So you do not have to again mention it in the CARO.
Ji, sir.
I hope I've got the question right.
Mhm. Sir, if we say the notes on accounts, whether forms part of audit report and relieve the responsibilities of professional in case of any irregularity pointed out in the audit on the issue already reported in the notes to accounts. Means if we have already mentioned in the notes to accounts, whether forms part of audit report and relieve the responsibilities of profession in case of any irregularity pointed out in the audit.
Okay, let's attempt that question by breaking it up. So
Yes.
let's first understand the financial statement. So you know that in the profit, in the balance sheet and the P&L, at the end we have a line saying that the notes to accounts with a reference to the note to account number, and we say the note to account form an integral part of the financial statements. This line is given in every financial statement, and it's rightly so. So the financial statements is not just balance sheet P&L cash flow, it is balance sheet P&L cash flow, significant accounting policy, and notes to account. So all are covered. There is no doubt in this. So, but this is entirely is the responsibility of the management, right? So first, management is responsible to make all the disclosures in the financial statements. Then comes the part of the auditor. So when the auditor starts doing the audit, he need to audit balance sheet P&L cash flow, accounting policy, and notes to accounts. And when we talk about recognition, measurement, disclosure responsibilities, we are verifying. Auditor needs to verify all and presentation. And if something is not appropriately presented in the financial statements, when I say in the financial statements, I mean whether in the let's say in the balance sheet, maybe current liability and current asset is swapped, or they are not properly disclosing as per Schedule 3. Auditor needs to qualify, okay, as per SS 705. We need to qualify. But since the notes also forms an integral part of the financial statements, if there is an inappropriate disclosure in the notes, for example, the related party disclosure come in notes. It doesn't come in financial statement, means balance sheet, P&L, cash flow. So if there is a problem there, an auditor has not qualified his report on that matter, then yes, it is a lacuna, it is a fault of the auditor, because notes to accounts is also his responsibility, because many disclosures which are required by the accounting standards are in the notes. An auditor, when the first para on the top, when he writes his opinion, he says, we have carried the audit of the financial statements of the balance sheet, P&L, cash flow, significant accounting policies, and notes to accounts. It is mentioned in the first para of the audit report. So yes, to answer your question, if there is inappropriate reporting in the notes to accounts, inadequate or inappropriate, then the auditor is responsible to audit that note to account. And if he has not highlighted the misstatement in the notes to accounts, then yes, he will be liable.
Yes, sir. Sir, NBFC gave loan to an educational trust.
Okay.
Trustees are directors of the NBFC.
Trust is
Then
not.
trustees are uh, NBFC gave loan to an educational trust. Trustees are directors of the NBFC.
Okay.
The loan became NPA, and after 11 years of NPA, one-time settlement reached with paying equal to the amount of the fixed assets the trust possesses, which is about 50% of the loan. All disclosures given suitably in the notes. Will any qualification required from auditor side in the year of settlement?
To understand that correctly, I understood the first part where a loan has been given. then the loan was not recoverable from the trust, correct? And finally, the
Yes.
company recovered the assets of the trust.
Yes.
Am I right? Yeah.
Yes. Yes. So the member is saying that everything was well mentioned and all the disclosures given suitably in notes at the time it happened. Now, will any qualification required from the auditor side in the year of the settlement of the loan?
Now, this will be my view. First, we have to talk about what is the qualification. So, qualification is there if there is any misstatement in the financial. Misstatement comes when you have done a wrong recording. So, let's say when you gave the loan, if it was as per the NBFC articles, if it was in the normal course of business, there is no problem. Loan was given. If at that time there was no concern, it is as per policy and procedures, it is fine. There is no misstatement in my view. Yes, loan went bad. That can happen in any case. It can go to anyone and go bad. So that is also a normal business event, which has a financial implication. So then company would have provided the loan as an NPA in the books. NBFC would have accounted as an NPA. So if they have done that NPA accounting, again, proper disclosures have been made. So there is no requirement for qualification. Now you have recovered money from your bad debt, basically, because for the NBFC it is a bad debt, right? He had to recover it. So you have recovered money from your bad debt. It is a statement of fact actually. If it is done and it is appropriately disclosed and reported, disclosed or accounted for properly, first accounted for, and then if any disclosure is required as per NBFC regulation, it is all done. I believe it is all, there is no misstatement, correct? Now the question you are raising is whether there is any part that is that there is a miss. Now if you say I want to put a qualification, there should be an element that is misstated. So it now depends on the settlement accounting whether you have missed writing of the asset. It means, like, let's say 100 rupees was due, you have received 80, but now 20 you have left it open, but settlement is done. Then that 20 should be written off. So the point I'm not aware of the exact case, so I cannot give a very confirmed answer. The point I'm trying to draw is that this entire sequence of event, NPA happening and NPA recovery, is very normal in business. So it does not by itself become a qualification. What is important in this is that it should be properly presented, disclosed, and accounted for. If it is properly presented, disclosed, and accounted for, there is no, I don't see any issue for a qualification. But if you are missing the accounting, if you are missing the qualification, if you are missing the write-off or something, then it may require to be evaluated and go for qualification. The question is, if this is a subsequent event and you need the user's understanding, then an emphasis of matter can be drawn. That this was some one-off case and this is how it was recovered or something can be done. Again, need to evaluate. I cannot say for sure. The matter is very complex.
Sir, if an auditor finds some probable fraud also on the annual statutory audit, where it should to be reported in the audit report?
You cannot report a probable fraud. Either you conclude that there is a fraud or there is no fraud, because the entire base of audit report is material misstatement. There should be no material misstatement on account of fraud or error. So let me put it this way: you go step by step. If you find a probable fraud, you intensify audit focus. Okay, it becomes a significant risk. You do procedures, you check. If you come to a conclusion that there is a fraud, then it need to be reported in and come. So let's stop reporting name. Let's get to what you need to do. It needs to be accounted for. So let's say I say my inventory is stolen. If my inventory has been accounted and written off, then my financial statement presents a true and fair view. So I do not need to qualify. Yes, if fraud is there, that inventory is gone, but I am not writing off, then my inventory balance is misstated. Then I should qualify.
Yes.
So first, fraud need to be accounted. Second, disclosure. Now here's the right question. Fraud procedures are mentioned. Now disclosure can come in CARO, if applicable again. And you need to report to central government if it's a fraud that you have found, and if it exceeds 1 crore and in under 143(12) of the Companies Act. Now that is a separate section, and total guidance note is there. You have to follow the guidance note to go step by step, because you need to communicate with management, you need to get their answer, then report to central government. So I hope that answers.
Ji, ji. So non-moving stock lying for more than 5 years, but management claims that same may be required in the near future due to the technical nature.
Okay.
Whether it needs to be included in CAM, EOM, or other para, or whether reports need to be qualified.
Okay, tricky question again, but step by step. Again, the evaluation process is the same. First, you have to understand what the industry, you have to understand it is normal in this industry to keep, let's say, spares for 5 years. And then the next question is the spare in usable condition? If it is, impaired, does it need to be impaired? Is the first question that will come up. That's something you need to assess. So you need to go by the nature of industry. I cannot give you a blanket answer here. Go by the nature of industry, understand the industry. If you come to know that everybody in this industry does in this way only. For example, let's say large steam boilers or oil rigs, they need a lot of equipment. So they have a lot of standby equipment which is maintained and kept operating because they need it anytime. So you need to consider the industry first. Second, you need to see if everyone in the industry is following the same accounting principles of what accounting policy they are using. So that knowledge will help you get more confidence on what the management is saying. Third, you need to challenge the impairment, whether that inventory needs to be impaired. That management has to give you the evaluation of the impairment. If there is need of impairment and they are not impairing, then you may consider a qualification. So that's the third part. Now coming to whether it should be an emphasis of matter para or other matter para. Now other matter para comes only where I want to speak of my responsibility or something about my my role. So here there is no specific role you are taking. It is a normal business. It is normal audit procedure to check inventory physical verification. So, or inventory valuation. So there is nothing that you are trying to say unless you are involving some expert or someone. Then you can may consider to mention in other matter para. If you need an expert, you may choose to define to tell. Emphasis of the matter, if that is very material and it is important for understanding of the user, fundamental understanding of the user of the financial statement, then it can be an EOM. So you have to go by the criteria I have just told and shared in the last 2 hours. So meeting the criteria, then you can go ahead and do the accounting treatment as you want to, auditing treatment.
So whether demerger of a division of a company is required to be considered as emphasis of matter?
Now, if you ask me as an owner of the company, I would like to know if so let's just imagine, take yourself in place of the owner of the company or a bank. If the company you own or you do business with is all of a sudden having a merger or demerger, wouldn't you want to know? Don't you think that is a fundamental information that I should be aware of? Because if I read the audit report, nowhere it is mentioned. If I read the financial statement, it is mentioned in the notes. So it's quite possible that the user does not reach that note or misses that note. So if that note is fundamental to users' understanding, then definitely an EOM should be drawn. This is my view. It's not written anywhere, but this is my view that these are important things. Whoever reads the financial statements now should know that, especially if board resolution has been passed and steps have been taken, the arrangement scheme has been filed, or even if it was mentioned last year, this year I may want to update what is the stage of my demerger. So these are important things which I think we should highlight to the use of the financial statements.
Second last question, sir. So the CAM parameter and qualification matter can be the same?
No. Qualification is somewhere you have not got evidence, or you are not you are saying there is no true and fair view. Means you are saying that audit did not go through effectively. You found a mistake and you are now qualified. Key audit, and already the qualification is drawn out in the audit report. Key audit matter is something you have verified. You are just trying to tell everyone that this is a critical area which I have done audit. Normally, I do not see that both of them come up at the same time.
So generally, all the questions are relating to CAM and EOM. Where to put this particular any aspect. One member is asking change in any aspect that can have effect in any future period will be a CAM or EOM.
Change in an aspect that has an impact on the future.
Change in any estimate that can have effect in any future period will be, sir, CAM or EOM.
The very fact that you are asking that question, it means that there is some difficulty in auditing that area, and
Yes.
it is a significant area, significant material item. So normally, I would say it will form part as a CAM. It will find place as a CAM. If it and again, as I said, if it was not difficult to audit, it was not something significant to the audit, but it is significant to a financial statement, then it can become an EOM also. Because it is significant to understand the future of the financial statement. So you want to highlight it to the user that please take care, this item in your financial statement has a future implication or something. Then it can become an EOM also.
Similarly, like if going concern concept was in doubt, where to report in EOM or CAM?
Which one? What?
When going concern concept is in doubt.
Okay. So going concern actually has a specific para for it. So going concern has three parts. Either there is no going concern, then normally you would qualify your report. Okay.
Yes.
Because you should prepare your financial on liquidation basis. If you feel that there is no going concern, assumption is not appropriate, it has to be on liquidation basis. If not prepared on liquidation basis, you will go for qualification, normally adverse opinion. Second, going concern is fine, then there is no reporting. Means I have money to pay for next 12 months, basically. Normally that is the criteria. There are many other factors, but that is the main criteria. Third, I have money today, but for next 12 months there is a uncertainty whether I will have money. So that becomes what is called as a material uncertainty relating to going concern. Again, the words itself, material uncertainty relating to going concern. So like I'm going to get the loan, or I'm going to raise finance, or I have some agreement in place where money is going to come. I don't have money on 31st March. Money is going to come. So those are cases where you have money right now, but there is a chance of uncertainty that money may not come because it's not in my bank yet. So such cases become a case of material uncertainty relating to going concern. They have to be reported in the material uncertainty relating to going concern para. They cannot be an EOM. It should be in the specific para given by SA 570 in the audit report. It cannot be CAM. It cannot be EOM.
Okay, it cannot be CAM or EOM, and it is to be mentioned under para as per standard 570.
Yes.
Because what about the second? What about the second one, son? The second one, when we have money and we are in a position to pay for the next 12 months, then
nothing. Then you have a going concern.
Then we have a going concern.
Then there's no reporting.
Right. Fine. So last one more question, sir. Can change in any estimate by the management which can affect on future that I have already covered. This another question, sir. Against an POM issued by the CAG. It's a little bit long question, sir. So many parts are there. Against an POM issued by the CAG, during their post-statutory audit review of a PSU last, being on a conceptual or policy matter of the ministry. The PSU had given an assurance to CAG that they shall be seeking ICI expert opinion on this matter and do some guidance received from ICI. And basis this assurance given, CAG has dropped their POM and issued a clean report. However, the PSU Company Audit Committee and Board did not give a clearance for obtaining the same, and the same matter remains as such for current financial year audit is this. Now, question is, what should be the reporting requirement for an auditor in this situation?
So EOM is continuing, correct? That's what you're saying. So see, I didn't understand why we had to go and drop the EOM. I mean, see, EOM is something that even in your auditor's professional judgment, it is important for users' fundamental understanding. You are not giving any qualification. You are not saying this is right or wrong. You are just drawing a reference. So that is normally harmless in either case. It is the other way around. If you are not drawing reference when you should have, then someone will question you. Normally, if you are drawing reference to the matter that you feel in your auditor judgment that it is material, it is your prerogative actually. Audit committee and board are not entitled actually to speak in this matter or decide. It is the auditor's decision whether to give, not give an EOM. So it's auditor's professional judgment actually. It is mandated by auditing standard. Yes, disclosure, I agree. Disclosure is the management's part. They should be doing that. If something is there is being happening, that's a different thing. So this is my view that it is the auditor's judgment. If the auditor still feels that it needs to go ahead, he can stand by his view, document his reasons, and move forward. This is again the matter is you mentioned that it is CAG and it is advisory committee, so I have very limited facts to speak on. They can only give a very overview talk on this.
One more question, sir, immediately popped up. Frequently change in the stock revaluation, whether it is to be reported, sir?
When you say frequently change, it can be year to year or it is during the year?
It is in the case of the moving average method, challenging method in information technology business of hardware material. So is auditor responsible to give remark on method of used for the evaluation of inventory in this case?
Auditor has to give remark on compliance with AS2 and AS2. So that's first responsibility. Once you finish with that, now the question you're saying is there's too much judgment or difficulty in auditing it, then I can say it can become a CAM. So, but let's stick to first AS2 and AS2. If that's a problem, then qualification.
Yes, sir. So thank you so much, sir. You have justified with your presentation and you have covered both the standards 701 and 706 and almost more than 17-18 questions we have taken during this presentation also, and members have raised so many queries also. So thank you so much, sir, from behalf of WSP of ICI for sparing your valuable time and enlighten all our members relating to the various intricacies of CAM or EOM and both these standards, sir. Thank you so much, sir. Thank you so much.
Thank you so much for the opportunity, and thank you to the WSB for inviting me over. It was my pleasure. Thank you, everybody.
Thank you, sir.
Have a good day.
Good day, sir. Thank you.